Welcome to Galaxy Brains.
An infinite amount of cash.
I'm your host, Alex Thorn.
The U.S. banking system is sound and resilient.
Bitcoin made a new all-time high.
If you're not long, you're short.
Satoshi's going to come on there, laugh hysterically, go quiet, all Bitcoin's going to be erased.
Bitcoin's the best crypto out there.
Bitcoin is going to zero.
Welcome back to Galaxy Brains. Bitcoin not zero. I'm your host, Alex Thorn, head of firm-wide research at Galaxy. Thank you for listening. As always, we have a great show for you today. Chris Rhine, head of liquid active strategies at Galaxy Asset Management, is our guest. We'll talk with Chris about his career, how he came to Galaxy and got into crypto, what he does at Galaxy. We'll talk to him a little bit about his work with the FTX estate and some other interesting stuff. We'll also check with our good friend Bimnet, a BB from Galaxy Trading, as always, to talk markets. This is a little spicier, longer one with Bim. He and I were getting into some interesting stuff. Before we get to that, I need to remind you to please refer to the link to the disclaimer in the podcast notes and note that none of the information in this podcast constitutes investment advice or an offer, recommendation, or solicitation by Galaxy or any of its affiliates to buy or sell any securities. Let's hop right into the show. Let's go now to our friend Bimnet, a BB from Galaxy Trading. As always, Bimnet, welcome to Galaxy Brains.
Thank you for having me.
What's happening? I'm not really sure what's going on in markets. Obviously, we've had a correction in Bitcoin lower, I think, since we last spoke. But broadly, what are you following right now?
Fixed income markets. We've had a little bit of a retracement in the inflation narrative, right? Things were easing over the past couple months, and people kind of got lulled into thinking that inflation was kind of under control domestically and abroad. And now you've had two back-to-back G10 economies print higher than expected CPI. You had Canadian CPI yesterday or earlier this weekend. You had Australian CPI last night.
And both were hot?
Both were hot. And, that caused fixed income markets to sell off. In addition, you have dollar-yen breaking through 160. Well through intervention levels and stuff.
Yeah, I was going to say, wasn't 140 like an important level a long time ago?
150 and et cetera. Yeah, but now, you're through 160, and you are in uncharted territory at least over the past 10, 20 years or so.
Are the Japanese the largest holders of U.S. bonds?
One of the largest holders of U.S. bonds, and so there's a lot of Twitter chatter about all these real money accounts in Japan that are now going to be forced to sell some of their fixed income holdings because they're so underwater on their portfolios. But yeah, it kind of seems like the evolution of Japan is kind of moving towards more of a monetary policy response rather than just outright currency intervention, which I think would be bad for bond markets if you had Japanese rates rise or. And they're a large money center for Asia as well. And
right.
So if those funding rates start to go up, that should have reverberations into the bond market globally. But high level, we had a lot of good data in the U.S. and bonds repriced pretty aggressively. But when you think about it, how much can the Fed really cut? I think they should cut because there's a lot of signs that the labor market's cooling and inflation's fine, and so. I think it's appropriate to cut, but I think the cut probably gets you to you should go to 4% if you're going to cut.
Mm-hmm.
But even then, I've gone back and forth because the data is just so unpredictable, as we saw with Canada and Australia. And if you look at certain high frequency things I think Jim Bianco tweeted out a photo of TSA and flight things of U.S. folks, you're at all-time highs in terms of
tons of flying happening.
Tons of flying activity, right? So it's a really hard picture.
It's kind of like chopflation, right? We're not basically. It's not really trending in either direction. Sometimes it looks like it's getting better, then it looks like it's getting worse.
Yeah.
Luckily, it's not getting dramatically worse yet. Right?
Yeah.
It's not it's not really reflation yet, right?
It's not, but it's
chopflation?
that the moment the economy starts to turn and we start easing a little bit, that the reflation stuff comes back. And so I'm so hard. And so in my head, I'm really the one thing you're not supposed to own is back end U.S. duration, 7 years and greater.
You don't want the long bonds.
You don't. You don't. It's just there's not much value there. It's inflation is going to average anywhere from 2 to 5%. Right. And so your return above inflation on being in that paper isn't great. And to be honest, basically every other asset class has outperformed fixed income for a while now. And so it's like, why put your money in something that's negatively real yielding when you have alternatives? And so I really don't like the back end of the U.S. curve right now. That's kind of my take. And then Bitcoin, I mean, I am not that constructive on a move higher in the near term. I think upside is limited. I think that there's a catalyst in terms of the presidential debate that's happening this week, and if you do get some crypto mentions, I think you could get a little bit of a short squeeze. But in terms of the supply that the market has had to absorb, it's pretty nuts.
You have the Germans. I guess
Germans
they seized
selling
coin they've been selling.
Yeah,
There's
we've
some in
heard
Asia.
of some flows out east as well.
You have the GOX coming up.
GOX coming up, like when the headline hits of like billions of dollars of Bitcoin being transferred to people and to exchanges, like that's going to cause the market to move lower. And I think 60K held because there's a lot of short covering and people are like tactically like that's a good level. But I saw a chart last night. I don't know if it was good or not, but in terms of like BTC balances held by OTC desks, it shot up a lot recently.
Yeah, those charts, that's like Glassnode data usually.
It's tough. But
yeah, we know they don't cover. But for inflows, I think it's a decent marker. It's more for balances, it's like I'm pretty sure not one of Galaxy's wallets is on that list.
Yeah.
But like people are sending coins to OTC desks. I mean, if you see it, even if they just track one
absolutely.
and it goes up.
And you've also had outflows out of the ETFs most days.
So what do you think? I've been writing about Mt. Gox, right? And just on that specifically, I would say the argument I've been making is not that there won't be selling or that it isn't a lot of coins, but that they're more diamond-handed than people think, and they're more and there's less coins I think really available to actually be sold from there than the news stories. They say 9 billion, 140,000.
No, but
coins.
At the end of the day, even if it's 1 billion, that's a lot of supply to take down. At the lows in the market when it's already taking down a lot of supply.
Yeah, my whole argument has been not that it doesn't go down, but that it's not going to be as bad as you think.
Yeah.
So if the market overreacts, then you could look at that as a buying opportunity. Yeah. But it is going to hit, and that probably is going to. There will be net new supply coming on for sure.
And so it's a tricky market. But yeah, I think the way the market's positioned, at least in the option space, is kind of how I'm thinking about the market, that Q3 is most likely going to be very supply oriented, and that in Q4 you'll have a broader rally as you get more.
Quite common in Bitcoin world too, if you look at the seasonality. But that's what the options market is pricing in terms of like where December vols end of December,
upside is bid on a relative basis.
Yeah. And then you're talking about supply too. Outside of Bitcoin, at least we know we're talking about like sort of unlocking seized supply or bankrupt supply in the case of Gox, but the altcoin space.
Altcoin space is infinite supply.
And there's a lot of it coming unlocked. A lot of the projects that raised in 21, they're finally getting, they were on like literally 3-year cliffs.
Yeah.
And that's now.
No, exactly.
But
here's the thing. You said it best. I think you put together the information. It's like $20 billion in crypto VCs.
Crypto liquid hedge funds.
Liquid hedge funds.
Total AUM, $20 billion.
$80 billion of unlocks.
In the next 2.5 years.
Like
who's going to buy them?
And so the supply story is really going to catch up to the market.
Yeah.
And
well, especially if the demand side hasn't really come here yet. We don't see the, retail's aping into, the Mag 7.
Exactly.
Right? They're not aping into Dogecoin. They're not aping into Bitcoin as far as we can tell, right? So if the liquid asset management sector in crypto is only 20 billion total, it can't take down that supply either. So,
we're coming at
the VCs created a lot of tokens.
It's magic internet money out of thin air.
Yeah. No proof of work at all.
No, fair enough. And there's a lot of good things happening in crypto.
There are, for sure.
Phenomenal. But in terms of the valuations, it's very tough to wrap your head around because, I believe in tech and, the adoption will be there. But not everything can be worth $1 billion.
Right out the gate.
Right out the gate. It's insanely hard to build a $1 billion business.
Yeah.
But how many $1 billion protocols do we have that make like $5 million a year,
Not
if that.
Yeah, not many. In fact, we were looking at of the top 20 coins, like on CoinMarketCap.com, which obviously includes stable coins and stuff too.
Yeah.
I think only 5 are the result of venture capital. So you've got $100 billion since 2015 invested in the crypto ecosystem by venture capitalists, according to our research. Not all of that went into token projects, but of that, I mean, probably thousands of tokens created out of that money, and only 5 are in the top 20. Right?
Yeah.
And I'm just saying, like, where is that value? Token VCs, like, where is that value? Right? And right, I mean, right, Ethereum, not venture backed, right? ICO, right? Cardano up there in the top 10. I don't think it's a good project, but not venture backed, ICO, right? Like Dogecoin, fair launch. Bitcoin, fair launch. Right, stable coins don't even really count. Right?
They don't. They shouldn't.
But I'm saying, like, what is show me, right?
Yeah.
It's basically like Solana and like Avalanche and a couple others that actually have venture money
top 20,
that are actually in the top 20. It's very few. Like, so it's also like, guys, please invest in and build stuff people actually want.
Realistically, I mean, the thing people want is like a blockchain that solves security concerns and that's scalable and that's fast.
Fast and cheap.
And like they.
That's the holy grail.
That's the holy grail.
Problem
And
is,
there's a couple of them that are like, going to be very close to like Visa level, like TPS and things like that. But how many of them do you need?
That's the other thing.
And like, what is the value of that network?
And this the
like,
whole
it's like, so it's so hard.
That's the whole thing. Like, how much block space do we actually need? Right? Like, you've got Ethereum and its L2s.
Yeah.
I mean, if that really long term works, how many other blockchains do you really need?
You don't really need that many.
I don't think so. Either.
How many Bitcoin L2s do you know launching?
We got some stuff we're putting out on this. So I don't want to. We'll save this for a later episode.
No, absolutely.
But we think there's 65 minimum that have fundraised or announced. Right? Like, I don't think Bitcoin can support. I don't mean the market. I don't think Bitcoin, the network, will be able to really house more than like 2 or 3 of these things, and that's if they have the money to actually post to
skyrocket though. Eventually.
Exactly. So tricky. But yeah, agreed. I mean, I think a couple. I think Solana's been interesting to me because at least it's different than the Ethereum ecosystem, like technologically. But like, how many alternatives to ETH is there room for? Right?
Yeah.
Especially if you get all these different rollups that have different features. Like, why do you really need another blockchain, or should it just be a rollup? I'm not sure. But anyway, people are still creating those new blockchains. Though.
I know.
We'll see.
I mean, but yeah.
Well, interesting.
There are consequences to printing money on.
And what just seasonally in the summer too, right? We're about to end. Like, next week is July 4th. We're really entering like the height of the summer now. It's going to be just weak, right? Markets. What do you think? I mean, stock markets are open. Crypto markets are 24/7. But they say like sell in May and go away. Like there's typically like low volume in the summer.
Yeah, no, I think it's really tough.
It is leading into a presidential election, though.
Yeah,
so there's going to be some excitement.
Yeah, I don't know. It's really tough to call. I think that that there's going to be less staffing than usual across the street.
Yeah.
But outside of that, it's really tough.
Yeah.
I think equities, they've rallied a lot, and so folks are going to look at earnings and be like, show me that you're still doing well.
Right.
Right. Show me that you're still growing.
You're not overvalued.
Yeah, and all that. But I don't even know if people care about value right now. It doesn't make much sense.
Well, and we're likely to have the Ethereum spot ETFs launch perhaps in the next few weeks.
Next 2 weeks, yeah.
So that could cause excitement. I mean,
no, it's
I know
a big
people are kind of bearish
event.
on that.
I mean,
but
it's not going to go well.
You don't think so?
People have not had enough time to market the product.
True, but like there was no real Bitcoin marketing on like
Bitcoin
day one.
Yeah.
Although it did have a nice like drumbeat for months leading into it.
Yes, you had Larry Finkel on TV about it, right? Like there's the marketing behind, like there were ads on newspapers, television.
That's true.
Right? It doesn't have the same marketing, and it's also just the worst product. And so, and everything we've known so far is that like crypto is a buy the rumor, sell the news event.
And even the Bitcoin ETFs were in the beginning, right? We had
all
a strong
the Bitcoin
dip
futures ETF was a buy the rumor, sell the news situation. The spot ETF was that. The ETH futures ETF was the same thing.
Yep.
And so I don't see anything different. The only thing different this time is you might not actually rally going into that like
right. I mean,
from
we're
here
not really
till the next 2
rallying
weeks.
now.
Yeah.
So to me, it's like the one thing I would say is that I feel like it might being bearish on the ETH ETFs is actually like kind of consensus.
Yeah.
And I think that might
I don't know.
that might be mid-curving
Look at the
it.
price action. It went from like a 2-handle to like
No.
the high threes, almost 4.
Yeah. True.
Like,
But well, that's true. But I mean, like now everyone's like, oh, they're gonna even on a relative basis, they're gonna underwhelm the Bitcoin ETFs, right?
I think the trade is really in the ETH ecosystem thereafter.
Yeah.
Right. So you have $10 billion, $11 billion of ETH that goes from being idle ETH to potentially redeemable ETH that can be used in the ETH ecosystem. It can be used to stake, farm on DeFi, etc. And I think the ETF opens the door to kind of more investors looking at like DeFi in a more critical way and from an investment perspective. And like, well, how should I really be thinking about ETH? And so what I really like, if I had to trade anything from the long side going in with the ETF, are the DeFi protocols, right?
Interesting.
That are actually valuable from the sense that the tokens, right? You had Uniswap turn on the fee switch, or propose to turn on the fee switch. You've got protocols like Maker, Aave, and Compound that make real revenues and that trade at multiples that are, let's say 20-ish, maybe like
somewhat
a bit
reasonable.
less. Depends on how you want to think about it. But these are companies or protocols that trade at reasonable valuations.
And they actually have usage.
Yeah. Multi-chain.
So you're thinking that the ETFs say, wait a second, let's learn more. It creates an educational thing. And then actually people say, well, not that I should buy the ETF, I should get real ETH and maybe do some of this real stuff or like on chain. Yeah, to me, it's like if you're going to be the world computer, you don't want to like take the keys or the gas or the whatever for the world computer and lock it in a vault. You want to plug it into the wall.
Yeah.
So to me, I've never liked this idea about the ETH ETF, whereas most Bitcoiners are really hodlers and think of it like digital gold.
So. But ETH, you should be using it.
Yeah.
And like figuring out stuff to do. And so, I'm optimistic for like the rest of crypto and like people figuring out what to do with stuff.
Yeah. Well, I guess I'm not sure yet whether we're going to record next week because it will be July 4th. But thank you so much, as always, my friend BIMNet, for coming on. And maybe we'll see you next week. If not, we'll be back after that. Everybody.
Brilliant.
Yeah.
Thanks for having me. Have a good July 4th, folks.
Let's go now to our guest, Chris Rhine from Galaxy Asset Management. Chris, welcome to Galaxy Brains.
Thanks for having me.
I'm excited to have you because you haven't been on before, but you've got some really interesting stuff going on at Galaxy. We're going to get into that. Before we do, crypto's a time warp. How long have you been at Galaxy? It feels like 2 years?
Is that a little over 2 years, almost 2.5 years now.
Well, it's been too long. I'm happy we finally have you on here. What do you do at Galaxy? And then I want to throw in some of your backstory too.
Yeah.
How'd you get to Galaxy? Everybody has a weird one. It's a pretty young company still.
It is. So at Galaxy, I run our liquid active strategies. We have a dedicated team that's focused on really investing right now in a liquid crypto fund, and my team's also responsible for the FTX liquidation. And we have a number of other interesting projects that we're working on as well that we should be able to talk about.
Yep. And where were you before Galaxy?
Before this, I was at Cohen & Steers for 10 years. I ran a global natural resources fund. I was a co-PM on a listed infrastructure fund. And I was head of strategic equities, which was kind of a broad group of thematic equity strategies in digital infrastructure, global logistics, et cetera.
Natural resources like what? Timber, oil, water?
Yeah.
Do people trade water?
They like to buy water-linked equities, but they probably do that more through infrastructure companies than natural resources.
So like, I was going to say mining companies. I guess you don't mine drilling companies, or water plant companies?
There are some, you could find water companies and infrastructure. In mining, they're usually big water consumers, not water producers.
Yeah, that's what I mean. Whatever the mining is in water, I guess it's pumping. Is there pumping companies?
Yeah, you could,
like aquifer
industrial
pumping.
companies, yeah.
We're going to talk about the crypto markets with Chris a fair amount. Obviously, as he said, he manages liquid active strategies. So I'm sure you've got plenty of directional views on the markets and different coins or different segments of coins. We'll get into that. But you mentioned the FTX bankruptcy. I think our listeners will know that Galaxy has this mandate to advise the FTX estate on I guess, mostly disposing of the liquid assets to raise cash for the creditors. What can you tell us about that? That's you and your team that does that work.
Yeah, so I think it's well known that the bankruptcy court has established that FTX has to return cash claims back to creditors. So FTX has been working with us and with a number of parties to essentially locate the assets and work on selling those assets, converting them into cash to get that prepped up to send back to creditors. So we've been focused in what's publicly announced in the liquid token space. We also worked to sell the trust assets.
You mean like the GBDC or whatever else? Yeah, those.
That's right.
Yeah.
And more recently in what we call hard to sell assets. So some of those could be locked tokens or other types of tokens as well.
They had like a lot of random tokens, right? Like how many different tokens do you know? Like, I mean, hundreds?
Well, you could take a look at their wallets and you would see hundreds and hundreds and hundreds of tokens. And it's not so easy where you're just like trying to sell Chainlink. You're trying to sell Chainlink across 12 different chains, which are non-native. So can you bridge those back? Is it difficult? Or can you just sell those on the non-native chain?
Gathering that, and doing all the work to figure out like where you could actually get like if I just using Link as the example, like if I have Link on like some obscure L2, like is it even liquid enough there to work to sell or like, right? So it's not just like, I guess they didn't deliver you a nice, clean Fireblocks account with all the coins, is what you're saying. That's not how it worked?
You know, in equities, it was very simple. If you owned, Bank of America, you own Bank of America.
Right.
Crypto is a little bit different. you think you own Bitcoin, but you own Bitcoin on whatever chain that's on.
Wherever Sam had it.
Each one has its own distinct contract address, and if you go to a counterparty and you're like, I want to sell you Bitcoin, and you try to deliver them Bitcoin that's bridged to the Arbitrum chain, they're going to be like, this is not what I thought I was buying. You need to deliver Bitcoin to me on its native chain.
That's tricky.
Yeah.
I don't think, just not that you were implying this, but Sam, pretty famously, FTX, they didn't have any Bitcoin, did they? Not really, right?
They had, there was Bitcoin recovered.
Like a sizable amount. I just remember this is one of the things that people, when FTX was collapsing, or right when they collapsed, people started finding their wallets and stuff and being like, I don't think they really have any Bitcoin, which is just, they had a bunch of Serum and a bunch of Solana, but not, and a bunch of FTT.
Those assets for sure. Bitcoin, they had a decent amount of Bitcoin, but it was not the largest by far.
Yeah. Can you say what the largest? I mean, I think people know that they had a lot of Solana.
Yeah.
In fact, the resurgence of Solana, which maybe we'll talk about in a minute, because people thought that chain was dead because of how integral a figure Sam was in that ecosystem. Of course, to be clear, I'm talking about Sam Bankman-Fried. I guess I'll say his full name at least once. So when I say Sam, what were the biggest assets that have been recovered? I should say liquid assets.
I mean, I probably can't really get into too many details, but there was a substantial amount of a number of assets. Again, you can see these on their wallets.
Yeah.
They have a lot of the
but also
Sam coins.
But going down to hundreds, though. I mean, was it like Power Law? Like a couple were most of it, and then or is it a nice?
So there was I would say probably when you look at it, a large majority of the assets were held probably in the top 100, and then you've got kind of a long tail. Long tail,
it sounds like. Very cool. I saw, I don't know the details on this, but I saw a report that there's a vote that's eventually the plan, the final plan or something is going to be put to a creditor vote soon. So, gosh, these people might finally have an end to this saga at least, which is great. Cool that, Galaxy gets to play some constructive role in trying to clean up this mess.
Yeah, absolutely. And, there's all sorts of different complaints out there that we wish we had the crypto, but just the way that I think customer accounts were essentially not even really segregated that well, and assets were all over the place. The ability, I think, and the complexity of doing that would have been so immense that if you think Mt. Gox from 2014 to today is a long period, this would probably be a process that lasts 50 years. So most people wouldn't even be around by the time they finally figured out where those assets came from.
And you guys, to be just clear for the audience, that you're not designing the bankruptcy process here. Your mandate is specifically to help deal with these liquid assets, right?
That's right.
Per whatever John Ray and the people, like whatever they've agreed to or been approved by the court, right? It's not
And for as much flack as I think the attorneys get for the fees they've charged, they have been able to recover a substantial amount of assets, and assets that probably many people didn't even know, people that FTX knew were even on the balance sheet.
Yeah.
So in one way, they've kind of paid for themselves in being able to really source some of this just lost and hidden crypto as well.
Incredible that you're just involved in both from Galaxy but personal. I mean, this is one of the biggest, or maybe even the biggest bankruptcy of all time. I forget. It's very high. I mean, the guy John Ray, the CEO of FTX now, he cleaned up Enron. Like this is the real deal when it comes to crazy bankruptcy unwinds. So I don't know. I mean, it's pretty historic.
Yeah, I mean,
not just for crypto. Like this is a bigger story than inside the crypto markets only.
Having just worked in investment management, really getting kind of the inside scoop on how this whole process works, it has been an enlightening and just an incredibly intelligent thought process for me to really see this and to understand all of the complexities that are taking place.
Well, I'm going to be happy. I'm sure I'm not alone in being happy that this saga will come to an end at some point. I mean, I don't know. I'm not sure how soon, but another important step happening, soon if they approve the whatever.
Yeah, definitely.
All right, let's move on. I wanted to ask you too. This just yesterday, I think Galaxy announced that there's a partnership between Galaxy Asset Management and State Street to launch managed ETFs that will invest in, I don't know, a variety of strategies. I'm not sure. Maybe you can or maybe you can't say. But we'll also hold Bitcoin ETH ETFs along these strategies. So in my mind, and I really don't know, but maybe it's crypto equities and also Bitcoin and ETH or something.
So my team will be working on that, and I wish I could comment more outside of the press release, but unfortunately I can't. The one thing I would say is I think it's just another good sign of continued institutional interest in investing in the crypto ecosystem and doing this through equities as opposed to through tokens or through venture. It's just another avenue that investors can really find that exposure. And for us who believe in crypto going forward, more and more equities should become public, and that pool of opportunities and investments we can make is just going to continue to grow.
Yeah, I think that's true, especially if there's any type of material change in the way the SEC is operated or the control of the SEC. I think you'll see a lot more.
Yeah.
Very interesting. I know that I would like those personally. I mean, I'm looking for interesting ways. There are some interesting passive ones today. I don't know of any active ones yet, so that's pretty exciting.
Yeah.
All right, so let's talk about crypto in general a little bit. Again, if you have a mandate from a bankruptcy to figure out how to most efficiently dispose of, that requires some important thinking and knowledge. But separately, if you're trying to manage a portfolio of cryptos that you want to earn money on, you must have some pretty well thought out views on crypto. I don't know maybe we'll just start not necessarily as a PM, but how do you think about Bitcoin? Is it digital gold? Is it? Are you bullish on Bitcoin, Chris?
Personally, I'm very bullish on Bitcoin for just a number of reasons, and I think where everybody who's investing in Bitcoin really needs to just kind of get a grasp on things is we need to kind of get away from this mindset of thinking of it like a gambling market and a get-rich-quick market. To me, Bitcoin, and I know Mike says this a lot, it's a generational asset. And when you look at what younger investors want to invest in, they don't want to invest in gold. And many of them don't invest in equities. I have an analyst, and I don't think he's ever bought an equity. He's only bought crypto. Crypto to him is an investment. And as you're well aware, even in the Asia Pacific region, they would prefer to invest in crypto than in their local equity markets. So you've really got this whole new investor base. And just the unique thing about Bitcoin, not everyone in the world can buy NVIDIA. being based in the United States, we're very lucky that we can access U.S. stock markets with our brokerage accounts, and we can put in an order and we can buy a couple shares of NVIDIA. But, somebody sitting in the Philippines who has, a couple bucks, like, for them to be able to access that, it's just impossible. You have to be very wealthy or very well connected. Bitcoin's very different. It's one of the most accessible investments that an investor can make. And when I think about just the long-term potential for asset accumulation into Bitcoin, and more people thinking about Bitcoin as a store of value or as a way to really even get dollar exposure outside of their existing regime, all of those things just really resonate with me. But it doesn't happen overnight. And I think, many people, they shouldn't have this mirage view that if they invest in Bitcoin, they're going to wake up next week a millionaire. That's not what any investment is supposed to be. I think about this much more as kind of this is going to be a fantastic investment over the next 10 years. So personally, I'm a big Bitcoin investor, and I think it's going to be an asset that's around for a while.
So how do you think about now, I'm not just going to go down the list of coins by market cap, but I totally agree with you, obviously, on Bitcoin. And it has kind of it is unique among the cryptos. Obviously, it was first. It's a fair launch. I'm not going to go through them. Our audience knows. It has a different kind of feel to it. It feels almost like a geopolitical macro asset at this point. I don't think any have crossed the chasm to join it there, but let's talk about Ether, because it's obviously the second most valuable. And we think we're on the cusp of getting spot Ethereum ETFs. In fact, I just published that Galaxy Research thinks that they could start trading as soon as the week after next. So like July, what is that, 12th, 11th, 12th, whatever that week is. So going to be more and more in that conversation, I think, because now, right, all the things that the Bitcoin ETF has in terms of accessibility and distribution that wasn't previously available what is Ethereum to you? And this is a little different. I think not a lot of people have a straight answer on this. Is it a world computer? Is it a Bitcoin competitor? What is it?
The one great thing about Ethereum is when I talk to institutional investors or even, high net worth investors, everybody knows what Bitcoin is and everybody knows what Ethereum is. However, if I go into those meetings and I talk about Cosmos, like they're just spinning their heads. They don't really understand.
What do you say if you have to talk about that? You're like, it's kind of another Ethereum, but it's slightly different?
Yeah, it's a different architecture and it's a different way that it works, but they try to kind of do the same thing at the end of the day.
But what is that thing that they're trying to do? This is for Ether. What I want is it a Web3 platform? Is it a internet bond? How do you think of it?
I think of it as a massive global accounting system.
Yep.
It's a store of record, like kind of a big data accounting system where it doesn't just have to be, a certain, 010101, but you can put all sorts of different data into it, and that'll be, recorded, and it's completely trustless, and it's stored on the blockchain for all to see. So to me, that's kind of what Ethereum is. In terms of kind of how I think about it, I did read your report, luckily, before I came, so I'm somewhat educated on it.
Sizing the market. We can talk about that, too. We'll continue, though. I don't want to interrupt.
But, I think Ethereum benefits from name recognition. That is one of the best things that it has going for it, particularly when you get outside of kind of maybe the audience that's listening to this right now, and maybe to those second-tier investors that are still just trying to get familiar with what crypto is. And, personally in my journey too, Bitcoin was number one, Ethereum was number two.
It makes sense.
It's just kind of how you go down the line.
I don't know if it was the first ICO. It might have been. I think it was up there. I can't recall if things like Mastercoin did an ICO or whatever, but yeah, it makes sense. It was also sort of the first general purpose kind of blockchain, right? And it's the second most valuable. So it makes sense in a lot of ways. I kind of struggle, but it's interesting to hear. You mentioned talking to investors about Ethereum. It does definitely have brand name recognition. Not as big as Bitcoin, but second biggest. It's meaningfully different from Bitcoin, right? It's taken different decisions from design roadmap and even design style, also functionality. I would say one of the areas they're similar is in the view that, and a pretty strong view both have, that a layered approach is the way to scale. Does the emergence of, I mean, genuinely now running pretty well for a while, the Ethereum L2s, the Optimisms and Arbitrums and Base, how does this impact is this good for Ethereum? Is it inevitable? Is it accretive?
I've tried to think about this, a million ways. And I kind of think of, I've tried to come back to this whole analogy, and I don't even know if it makes sense anymore, where, you've got like the Visa network, and Visa's processing all of these transactions, but you have all of these different banks that issue their own Visa card. So you could have hundreds of banks that are all issuing Visa cards. And then users of those Visa cards can go to any, store that they want to and use those transactions, and the issuer bank will get whatever they have and the Visa will get whatever they have. So I kind of think about these layer twos as being like those issuer banks. But at the end of the day, there's no value to those cards if Visa, the blockchain, or the Visa, the network, doesn't exist. So
back as the layer one.
Right. So I know so many people try to value Ethereum based on revenues and what that potential fee rate is. But at the end of the day, really, there's a massive intrinsic value there too, that if it didn't exist, well, then none of the other stuff would exist either. So, I try to shy away from thinking too much that layer twos are kind of sucking the value away. But what I would say in the near term, just given the number of layer twos that have really emerged, we've probably seen Ethereum investors kind of diversify into them. So it hasn't really allowed Ethereum to essentially see some of the big price response that you might have expected with kind of the new ETF and whatnot, although we did see some good price. But I think that's kind of maybe why prior to the ETF announcement, Ethereum had just kind of been struggling a little bit to keep up with Bitcoin, is because, little bits of that was being shaved off and sent to some other areas.
So you mean less the argument that the transactions on the network are moving to the L2s, that less that being suppressing to ETH price, and more even like the tokens for those L2s attracting some investment that would otherwise have just gone to ETH probably.
I think so.
Yeah.
And the way I think about it too when I run it in my portfolio is I think of, we run everything with a beta to Bitcoin, a beta to ETH and whatnot. What you tend to see is that layer twos tend to have a beta to Ethereum that tend to be a little bit higher. So let's say that we've got Ethereum, and we'll just take Optimism, for example, and, it runs at a beta of 1.5. Well, I could take, let's say 1% of Ethereum, and I would only need to buy a smaller amount of Optimism to get that same beta to Ethereum. So from a capital efficiency standpoint, does that free up a little bit of extra exposure that I can put into something else?
Interesting. So it's almost like you get the same exposure but with slightly higher beta. So that could also harm the specific ETH investment directly into that ETH token.
Well, that's why, I'm just curious if other investors have been doing something similar to that, where they can get proxy ETH exposure through the layer twos, but because they're higher beta, they can move some of that extra capital if they want to be in Bitcoin, or if they want to try another.
Or in equities for that matter.
That's right.
So what do you think about the ETH ETF then? I mean, the report that you're talking about, it's on our website, and we don't go – so we did the one for Bitcoin, sizing the market for a Bitcoin ETF, where we made a prediction on net inflows and then a prediction of what those inflows that we predicted would do to Bitcoin spot price. Similarly here, we made a prediction about net inflows. We don't actually get to an ETH spot price prediction, but we read a lot about the general thing that we say is that we think it could be more sensitive to movements because it's actually – more of it's locked somewhere than Bitcoin, right? Particularly like a third of it's in staking, right? It's pretty sticky there. You're not going to take it out of staking where you're earning quote unquote yield, although really, new issuance, you're earning rewards to then put it in an ETF that doesn't have rewards. So it's not coming from there. Yeah. There's a bunch of it locked in DeFi. It's probably not coming from there. We said base case, they could be about 30% as see about 30% the net inflows over the same time period that the Bitcoin one did. In the end, that's actually relatively naive. That's basically market cap weighted. That puts us on a little bit of a higher range than others I've seen. What are your thoughts on when I say success, I don't mean performance of these, what will be liquid equities. I mean of the flows. Like, do you think we're going to see big flows or bigger or smaller than we saw for Bitcoin? What do you think?
Yeah. So unlike, Bitcoin, the staking element is like a huge wild card out there. I've talked to a number of just friends, and they're like, no way would I ever move my Ethereum, over to an ETF.
So you're talking about like 300, it changes, depends how much is staked, but like, in the 300 to 400 bips annually that you'd be leaving on the table if
That's
you don't
right.
stake.
Yeah. I think where you will see ETF flows, so, prior to the ETFs, the way that most investors, larger investors were getting exposure without doing it directly through, a Coinbase or Gemini or something, was doing it through a private fund structure. So those private fund structures, of course, are going to be much higher fee rate than the ETFs. So you could see a big rotation there. Mm-hmm. What we also saw is that with Bitcoin, there was a flow from Canada, and that moved into U.S. ETFs because you had U.S. investors that were actually buying those ETFs because they weren't available in the U.S. So you'll see some of that flow come back. And then clearly there's probably a number of other retail investors where, they just never actually opened up a wallet.
Or they did, but they have money in like a 401k and they could use the brokerage window or an IRA.
That's right. Or they've rolled over in one of their IRAs and they're stuck investing in stuff they don't want to.
Right.
So I think there will be flows. Trying to handicap that number is so difficult. But my guess is very similar to what was published, is that it's going to be far less than Bitcoin. Even the institutional investors I speak to, when we kind of talk about some of the institutions that are a bit further along than others, it's more of kind of a 80-20 split, Bitcoin, ETH. So for other institutional investors, like, they haven't even gotten to Bitcoin yet. So,
Right.
For institutions, of course, they move a little bit slower. But if we kind of use that 80-20, or maybe a 75-25, you'd be talking about, a quarter to a fifth of the flows.
That makes sense. That's kind of what we said. Although, like I said, 30, we said, I think, I don't know. The other thing that I have when I think about this, and I totally agree with everything you said, and I agree that if I'm going to own ETH, I'm going to want to stake it. That matters to me. Some people have said, well, Alex, let's say it goes up 120%, are you going to be mad that you only got like 110%?
Yeah.
And I'm like, okay, maybe not the way you say it that way, but ETFs are largely held by financial advisors and other, if it's allocators and institutional investors, they're famously fee sensitive, right?
Yeah.
Like, so if you start looking at the lack of staking, like, they're going to waive the fees for the first 6 months, but you're actually going to lose 200 bips because you're losing half of a year if you hold it for the first 6 months in non-received staked rewards. Now, obviously, there's also like operational reasons why they probably couldn't even stake all of it anyway, but. To me, it's materially different. But do you think that's if you are an allocator or an institutional investor and you're in the Bitcoin ETFs, you think they put some into the market cap weighted into ETH too?
Absolutely, and I think some financial advisors they won't advise client assets outside of brokerage accounts. So, they can't even put money into some of these wallets, or they can't put them into certain exchanges. So they haven't had an option whatsoever. So it's kind of like, maybe there's a slight disadvantage, but if I can't touch that in the first place, well, this is much better than nothing.
Yeah, that makes sense. What about, now I am kind of going down the list, Solana. To me, and by the way, we've written this, and I personally kind of believe this, we called Solana the third chain in our annual Watch This Space report. I think that the data shows that's true from things like DeFi TVL and accounts and all this stuff. Certainly in meme coins, it's basically ground zero for, there were like 100,000 coins created a day at some point. It's crazy. I've liked it because it is a meaningfully differentiated technology from Bitcoin and ETH. ETH is not like Bitcoin, and Solana's not really like ETH. A lot of the 2021 sort of alternative chains were basically Ethereum clones. Even Avalanche, before they launched subnets, the C chain is basically an ETH clone, right? Phantom and blah, 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 all these other ones were pretty similar. So I'm kind of like, well, what, especially if Ethereum scales, I just viewed it as like additional Ethereum style block space. But Solana is different, right? If ETH is pursuing a modular stack, right? And we haven't even talked really about like Celestias and eigenlayers and things like that, but like broadly a layered scaling and even modular stack. Solana kind of is eschewing that entirely. They believe in this monolith. That's what makes it interesting to me. And by the way, it has a lot of usage. How do you think of Solana?
I'm pretty optimistic on Solana. I think even with the recent announcement, the team there is really looking at how they can advance the usability of Solana. I think what would be, just...
Oh, you're talking about this compression thing that, is that what you're talking about, the state compression?
No, this is the release they just had the other day where they have, what are they called, actions or...
Oh, yeah, I forget. I don't know. Yeah, more functionality. There was a new thing that this guy, Mert, I forget, I think it's Helios Labs. He's an important Solana developer too, where they can do state compression, state growth on blockchains is an issue. And they can compress. It's actually, I think it's very similar to UTreeXO, to my Bitcoin audience members. They might know Todd Stridja. Again, basically just compressing the state, using basically Merkle trees. But I think here they're using ZK stuff. Anyway, that was another one though. Still, I agree, plenty of advancement. They really are active in coming up with new ways to make it work better.
Yeah, I think, the Visa partnership really coming out in September last year seemed to time very well with people being like, wait, there is value here. Why would Visa partner with them if this was a dead chain?
It did, to be clear, this is one of the most craziest trades of 2023. It was at like $12, like in the summer of last year.
Yeah.
And went to what, 180 as high as we've gotten? I think it's the cycle.
Got up over 200.
It went over 2?
Oh,
yeah. I mean, that's more than a 10-bagger in a few months. Crazy.
Yep. It was pretty big. My personal view is that, when we see kind of some of the distributions of FTX asset back to creditors, what was one of the biggest assets that was on the platform, Solana. What do those investors want to buy back? Solana. So you could see a bit of a buying event later this year if those creditors really see value in Solana and they really want to get in that ecosystem. And I shouldn't troll crypto Twitter, but based on all of the crypto Twitter posts that I see, a lot of them like Solana.
Yeah. One of the things we were talking about too, and I want to ask you about investor sentiment. We talked a little bit about how you would talk about or deal with Bitcoin and ETH when dealing with an institutional investor. Or plenty definitely still aren't looking, but it feels to me like they're not really back yet. Some are. We were talking. I've talked with people at top 10 pensions for several years, and a few of them got like pretty far, and so far even that maybe they lasted through the bear market, but they kind of stopped like asking questions for a little while. Some of those folks are genuinely back, but most are like maybe just now that I've seen starting to get questions again. I mean, it's hard to ignore Bitcoin's 160% rise from just year over year even, or whatever it is. I mean, we're up almost. I mean, it's 16.5 to start 2023. 61K right now. It's hard to ignore that. So they are asking, but what's your sense of their interest and involvement level and timing? Like what's the thing we've used to say? Institutions are coming. Well, they came and kind of left. Some started. Are they coming back?
Last year it was dead.
Yeah.
There was just absolutely nothing. We've had a lot more discussions and a lot more conversations with institutions that are doing homework again. And we've actually talked to some of the consultants as well. And even there, where their activity was essentially zero, they're starting to have more engagements with clients that are starting to snoop around again. I think it's probably still not necessarily a this year, but I really think that next year we're going to start to see a lot more direct investment from institutions there. Some of them, maybe they've already put capital into the venture side. With some of the regulatory, easement that we're seeing on the liquid side and just kind of some of the progress around Congress finally, taking a bigger look at crypto instead of ignoring it. All of that is very supportive because the number one issue we hear nonstop is the regulatory risk around liquid crypto.
Yeah, and that makes sense. I mean, there has been a lot. I think it looks like ETH has made it through the ringer finally. What was your take on that? I said and I thought it really was a pivot. Like they seemed set to deny. And then, they're like, oh, crap. And within 3 days, you guys got to get us everything because we're going to approve. And then they did.
Yep.
Like on Monday, Eric Balchunas tweeted that they were upping their odds all of a sudden. And then on Thursday, they were all approved, I think. The 19B4s, yeah.
I wish I had a crystal ball to see what happened that weekend because it was dead silence.
Yeah.
And we're partnered with Invesco with our own ETH ETF, and we know exactly, what the conversations have been. And up until Monday, there was zero.
Yeah.
So
it wasn't that they weren't
a huge
constructive.
Surprise.
Right. It was radio silence. I mean, I don't know. I would also love to know what precipitated that.
Something happened that weekend.
I mean, I think it's objectively true that they shifted their behavior. They went from dead silence to incredibly urgent, active. But anyway, so ETH looks, at least, for example, the 19B4s approved Ethereum commodity-based trusts.
Yep.
I think Chair Gensler still refused to directly say whether ETH was a commodity at a subsequent hearing in the Senate Banking Committee. But nonetheless, you can't put securities in a commodity-based trust, legally speaking. So I think that case is pretty settled.
It should be.
Yeah, and then I saw, too, that the SEC, it's not a no-action letter, but they sent sort of a non-Wells notice to the Ethereum Foundation, right? Or was it Ethereum Foundation or Consensus? I can't remember which.
They did Consensus. I thought there was one
Consensus
for the Ethereum Foundation, but that was a while ago.
Yeah. So they told them that they were stopping their inquiry into whether or not Ethereum was a security. So it seems like it's through, but that's still pretty much it, that we have like very clear positive clarity in, right? The SEC is still alleging that giant list of cryptos are crypto asset securities.
Right.
So that helps.
At this rate of speed, maybe by like 2050, we'll get through about 25 of them.
Yeah, exactly. I think hopefully there's some kind of new process, whether from a change at the regulators or legislation, right? I mean, there's the FIT21 Act has very clear ways that tokens can be launched or sold, and also determined if they are or aren't a security.
Right.
That would make it much easier to know, and then you could develop. But that helps a lot. You think they're seeing that as increased regulatory clarity? These institutions,
oh, absolutely,
they're seeing that.
Yeah, they're definitely seeing that, and I think what's really interesting around the ETH ETF too is just how quickly the follow on was with FIT21 and other comments that we heard coming out of Congress, and then of course from presidential candidates and the president himself. So a lot of things kind of changed very quickly there, and it's definitely
pretty
caught
exciting.
everyone's attention. Yeah,
even the you had a very rambunctious veto threat issued by the White House on SAB 121. I mean, truly incendiary language. Things like, and keep in mind, it's like a relatively arcane accounting rule that sort of as a byproduct affected banks. And they came out with a statement that said this would cause financial instability and all this crazy stuff. And then FIT21, which is frankly a much more comprehensive and impactful legislation than overturning this SEC accounting bulletin, got we look forward to working together and no veto threat. So I was like, that's to be they were kind of painting SAB 121's overturn as if it was some kind of apocalyptic scenario. Yeah. And then the thing that would radically overhaul the CFTC and SEC's authority in this space, they were like, we're looking forward to working together.
Yeah.
That was in the span of 2 weeks, that change.
Yeah.
And I think those are the clearest markers to me if you look at those two what do they call them? I forget what they call it. Statement of Administration Policy. Mm-hmm. Do you think we're likely to get – do you think it hinges on the election? Do you think it's going to – or are we in a trajectory that becomes more positive in general? Or how are you thinking? Just be honest, too. Yeah. I think the election's kind of outside of the Ethereum ETF approvals and or launches, I think that's basically the next catalyst here is the election.
Yeah, I've become so, put off by politics. I shouldn't probably talk about politics. I started watching House of Cards again.
Oh, no.
But, a lot of...
What you need to do was watch West Wing. That'll make you feel good about politics.
Yeah.
That's the good one.
What I feel in politics, there's a lot of talk to really garner votes.
Yeah.
And I would love to see that talk turn into action after those votes are cast and those candidates are sitting in their seats. Clearly, if they're not, then it's going to be a very short term for whoever those candidates were. Now, I'm not only talking presidential candidates. I'm actually talking some of the congressional candidates as well. But neither presidential candidate or president would really have what do they have, 4 years? They can't do more than that. So it's kind of a one-term kind of run.
Yeah.
So
I also kind of think I tend to be someone who doesn't. I wish. I guess this technically makes me more of like a federalist, as in like states' rights over the federal government's rights. But I'm just pretty sick of it like being apocalypse. Each side says that like, oh, if the other guy wins, it's apocalypse. It's like that shouldn't even be possible. President shouldn't have that much power. And by the way, they don't. This is this irony that like it's they really don't have nearly as much power as the frenetic like media coverage of the presidential election always makes it seem.
Yeah, the problem is that the centrist kind of approach to government has been completely shattered, and you're either on this side or this side, and you either win or lose. Yeah. And that's what just makes everything so apocalyptic. It's because if I don't win, it's apocalypse.
Yeah. Chris, you've had a long career in investment management and portfolio management. You came to Galaxy. You're now trading cryptos. Sounds like with these, you may be trading equities as well that are interesting. But what made you do that change to crypto, to come in and take a chance? I mean, I don't know. Colleagues probably were like, "Oh my God, you're going to do that crypto thing? Like that's crazy." I mean, I think we've all heard that at one point or another. And as a caveat, as sort of a last question, what makes you most excited about, public blockchains, Bitcoin, ETH, crypto, however you want to describe it?
Yeah, so actually my old risk manager at my old firm, I remember he came into my office after I, announced my resignation, and he's like, I really give you a lot of credit for doing this. He's like, you had a great job, you had a great career, but you're really taking a risk and just doing something that you really believe in. And, for me, crypto, when I came over and whenever I was even thinking about this, it was still, being managed. There were a number of managers out there that had great pedigree, had been in investment management, but you also had a lot of these other small garage funds and whatnot. And what I saw really missing from the crypto investment landscape was really kind of an institutional kind of approach to investment management in crypto. And I think there's a handful of people that actually do it pretty well, but I think there's a lot of people that do it very poorly. And it's not just kind of an institutional approach in dealing with clients. It's having risk management and having risk policies and having compliance and making sure from even a legal aspect that everything is kind of in line with an approach that from an endowment or a pension plan, when they would look at kind of running an ODD process on you, they'd be like, these guys know what they're doing. And that's really why Galaxy really was attractive to me, is because I saw what was built out here. I saw what the asset management team had done, and I saw kind of how they had really built and structured the firm. And I think coming into crypto, it's a big, risk to a pretty steady career. But at the end of the day, equities can get pretty boring. It's kind of the same thing every day. You've got, 1,000 sell-side shops out there writing the same research. Everybody's model is essentially taking company guidance and plopping it down plus or minus a couple %. And it just seemed so commoditized. In crypto, it's still kind of more on the frontier. And there's so much opportunity. And for me, kind of that structure of it is what creates the opportunity to really drive alpha. And the second, volatility for me is something that drives alpha. Like when you have assets that can really overreact to the upside and the downside, if you have a very, astute process on how you manage a portfolio, you can take advantage of those. Now, clearly, as I was trimming Solana along the way, last year, I felt dumb when it got up to 200. But, that is the risk-managed way to go about, keeping a portfolio within these guidelines that any institutional investor would want you to.
Super interesting. And so, well, thank you, Chris. I mean, that's it. That's Chris Rhine from Galaxy Asset Management. Thank you so much, Chris, for coming on Galaxy Brains.
Appreciate you having me here. Thanks.
That's it for this week's episode of Galaxy Brains. Thanks to our guest, Chris Rhine from Galaxy Asset Management and Bimneta BB from Galaxy Trading. As always, everyone have a safe and happy weekend, and we will see you next week. Thanks for listening to Galaxy Brains, the weekly podcast from Galaxy Research. If you enjoy the show, please like, rate, review, and subscribe wherever you get your podcasts. To follow Galaxy Research, sign up for our weekly newsletter at gdr.email, read our content at galaxy.com/research, and follow us on Twitter at GLXYResearch. See you next week.